Hello and welcome back to the RA21 podcast. My name is Aaron, and here joining me today is, of course, Ryan, my co host. And today we're going to talk about cryptocurrency, and basically, we're going to try and lay out what is our investment thesis as well as our foresight and what we can possibly see in this particular sector today. So, before we start, I want to ask you a very good question. And how have you been doing, Ryan?
Hey Aaron, nice to be back on the show. Yeah, I'm doing all right. February has been like a really fast month with like Chinese New Year and like coming back to work after a long break. But it's been busy, but it's been good. Anyway, how are you?
Yeah, great. It's been a very busy month. I think the last time we spoke with the folks at Ringgit to Dollar, it was before Chinese New Year lah. So a lot of things has happened since then. I think both of us have been pretty much taken off like a not a super close up like approach towards our investments lah. Because I can actually see like the updates on investing hasn't been very news or YouTuber recently, which is a good thing, right? We are pretty much like near but not so near type of approach. So I think that's going to be a very good speaking point today about people who have not actually like looked at the crypto space today, right? So I've been good, busy, but now it's time to get busier again lah, as usual. All right, so I guess the main question, like I think most people want to ask, right, in this topic today is that what is actually crypto, and how do we actually define it before we go to the depth of the questions?
Right. So, what is cryptocurrency? And I think like the question that always follows that is what is blockchain technology?
Mm-hmm.
A lot of times when people tell me they don't know where to start, I usually point them to understand the underlying technology of cryptocurrencies, which is blockchain. So basically, you kind of like need to understand that the blockchain solves the problem of trust. And when you add the element of money into trust, then you get cryptocurrency. So in short, like in a definition way of like speaking, cryptocurrencies are currencies, digital currencies that are operating on decentralized blockchain platforms, if that makes sense.
Mm-hmm. So I guess a very good way to start is as what Ryan has mentioned, right? For those people who are trying to wrap their head around what cryptocurrency is that you just have to understand that this is an alternative system to whatever we have today. And blockchain technology is basically just what we call a ledger, right? When you start a business, right, or any business for that matter, even for your own personal finance, you have your revenue statement, your income statement, you have a balance sheet, and all of this like financial transactions, right? It stems from a ledger. For those of you who are accountants out there, you understand that for every single transaction that you operate in a business, you have a general ledger, then you translate that towards your accounting balance sheets lah. And basically, if you understand the whole financial system, right, for more news, you can actually listen to our first podcast called the Fiat Standard. Every single um, legacy institutions out there, they are very primarily focused on keeping ledgers for everyone, right? When you go to a brokerage account, for example, you have a ledger. They keep a ledger to know who owns what. For example, if you own Apple stock, right, then they'll list, okay, Mr. Tan or something, he owns this amount of shares. Then if you go to a bank or legacy institutions, right, he also like list down how much money you have in a bank, right? And for each every single legacy institution, right? Be it, let's say, for example, you have a bank in Maybank, then in Singapore we have DBS Bank, right? Each of these banks will keep their own ledgers, and basically that is what the entire institution is about. It's about keeping stock or keeping the numbers up, lah, right? And the reason why Brian said that basically they're trying to remove the trust is because now they are trying to remove the ledger system from institutions and then decentralize it over the internet, right? For example, the best example I can give is BitTorrent, right? Of course, we know that BitTorrent is the primary use is piracy, right, for movies or whatever, and it's very something which is not possible to stop because in order for you to kill the entire peer-to-peer network of BitTorrent, you need to basically cancel every single person who has access to the file and stop sharing it, which has proved to be close to impossible, if not impossible, right? If not, they would have killed off they would have killed off piracy a long time ago. But up to today, it's still very strong. And every single time they try to target a single torrent site, a brand new torrent site comes up, someone will always have a copy of another torrent site, and then they'll just upload it and then they'll mirror the torrent. So basically, what cryptocurrency is, as what Ryan has mentioned, is blockchain. And the base form of it is just a ledger system, a decentralized ledger, where many people around the world has one ledger, and they'll basically record since the existence of the first transaction, right, to the point of today, right, how much each individual owns, right? And that is the main problem that it solves. But why is this important? I guess that's the main question, right? Like, Ryan, why do you think that this is a very important aspect of the next evolution of our, let's say, mankind?
Kind of like how we started talking about the fiat standard and eventually progressing into Bitcoin on the first episode. I would say the biggest problem that we have right now as humans is the fiat system.
Mm-hmm.
So when we talk about like problems that crypto or blockchain solves, the first thing that comes to mind is actually the fiat standard or fiat money in general. When we talk about like fiat, like and the risks that it can impose on us, I think about things like the 0809 crisis. I think about the ever growing national debts. I think about like crashes like the COVID crash, and everyone's just printing money left and right. And as a result, like right now, we are experiencing the consequences of money printing right now. Inflation is at an all-time high. I think the latest number for inflation in the US is 7.5%. It's pretty much at an all-time high. We have never seen anything like this. So never seen an inflation value of 7.5 as high as this. Even back at home in Malaysia, I'm seeing food prices double. Maybe because it's a little bit of Chinese New Year, so it's a little bit of like compounded. But I'm hearing a lot of things like you know foods going like there's food shortages, even like eggs on sale in the supermarket. They are on shortage right now. Can you believe that? And everything is just priced so insanely high right now. The governments have to come in and stop you know price hikes and whatnot. Business is quite bad in a sense in that way. And it's just one of those few things that like the fiat standard can bring to us. It's a potential problem to humans, and that's why I would say like we need Bitcoin particularly that solves this because of how it's you can there's only 21 million bitcoins. You can make more bitcoins. Your bitcoin won't devalue. There's a stopgap to like whether how much bitcoin can inflate because there's the hash rate control. Unlike fiat money, you can print as much as the government wants to. So yeah.
Yeah, I completely agree. So, for folks who have difficulty in understanding some of the technical terms, right, and what the fiat standard is, I highly recommend that you can listen to our first podcast titled "The Fiat Standard" because we go quite in depth into how the entire system works, and but into just to paraphrase our first podcast, right? Basically, the main reason why we believe that cryptocurrency has value is because it is an alternative to the fiat standard, right? If you have always been in a situation where you always wonder why prices always go up, inflation is always a thing, sometimes going back in history will be able to help you uncover the reason why. And one of the main reasons is because our entire financial system is hinged on the fact that, give me a moment, in order to create money, you need to be able to create debt, right? So debt creation is something which is very integral and part of our existing standard. And because there's no hard cap, right? Ever since they went off the gold standard in 1940s to the 1970s, right? The amount of cash that's being injected into the system every single time there's a crash has always been going up, right? If you actually were to take a look at the most recent one, which is the COVID number, right? I think the government has printed close to 50% of the existing monetary base in 1 to 2 years versus the entire history since the creation of the US standard, right? And
Yep.
basically, like what Ryan has mentioned, right? and that is the Bitcoin. The reason why Bitcoin particularly is so interesting is because they decided, Satoshi Nakamoto, right, decided to create a alternative system where it serves two functions. The first function is that the hard monetary policy is that there can never be more than 21 million Bitcoin, right? And that is the first hard rule that has never been created in the history of human or mankind. And that is the fact, right? If you were to trace back the understanding of what money used to be, we can go to as far as seashells, right? Last time they used to have used seashells, then they realized that it's not possible because um, there's an infinite supply. Then when they tried to use gold, but they realized that gold also has an issue with the distribution as well as the mechanics, as well as being able to store gold is very expensive. So Satoshi decided to solve these two things, and he basically used the technology of peer-to-peer or your BitTorrent technology, right, and decided to base it on a ledger with a hard monetary rule that there can never be more than 21 million Bitcoin. And the second rule that is very important and integral to ensure that people respect this is that he ensured that there is a network system inside this where anyone can send Bitcoin across jurisdiction, right? It doesn't matter whether or not you have legal laws, doesn't matter whether or not you are in some small country, big country, you can actually send your Bitcoin from one wallet to anywhere in the world and no one can stop. And there's actually a very huge benefit towards Bitcoin because if you were to actually look at the history of the gold standard, right, what happened during World War One and World War Two is that the governments in UK actually created rules and regulations, right, where they actually seize gold from the public, or in fact even stop the public from redeeming their gold from the paper-backed dollars that they actually distributed. Because last time, in order for you to keep gold, right, nobody is going to like carry gold around or keep the gold in the house. They use banks, put the gold inside the bank, and then in exchange, the bank were to give them gold certificates where they say basically I owe you money lah, right? And over time, what they realized is that the banks decided to do one thing, and that is to give more paper than the actual physical gold, right? And that is why we decoupled from the gold standard because the bank actually like printed more supply of cash, physical cash, than what they actually have in their vaults. And that is why if you were to trace the US dollar or any currency for that matter, right, against the gold price, right, they have typically fall close to, I think since the decoupling of the US gold standard in the 1970s, right? I think the US dollar has fell close to 80 or 90% of its surface value, right? And that actually shows you like how bad inflation can be lah. Sometimes Ryan mentioned just now the inflation rate is 7.5%, and even that I think is a lagging indicator because if you had purchased property in post-COVID, right, 2020, 2021, right, you will start to realize that property prices actually has already increased significantly faster, even though the inflation rate they say is only 2 to 3%, right? So the
Yeah,
alternative is that you are in a system where they have the ability to print unlimited amount of money versus a system where the hard cap is 21 million and everybody has to respect it, right? So
that's
I
right.
guess the main problem that it solves is that it gives you an alternative to basically store your wealth in a manner that is decentralized, right? And then the main question is whether or not this particular technology, right, has the ability to last over time lah. Because of course there are many issues like people are worried about the legality of it, things like that, which we will touch on today lah. So I guess like given that it solves such a huge problem, right? Like why does this change things, Ryan?
It changes everything, of course, in my opinion, by having that option to protect your wealth, to not let it be eaten by inflation, or be at risk, like say mortgages like the 0809 crisis. Everyone's able to protect their wealth in such a manner that we can freely transfer the money across borders as well. And like you said, with the whole Bitcoin peer-to-peer, uh, BitTorrent technology, nobody's gonna stop us from like redeeming our Bitcoins from our ledgers, like how in World War II, the was it like the British government stopped their people from redeeming their gold,
Yes.
so there's really nothing to be worried about, like say like the next World War III coming between Russia and Ukraine. But there's just this flexibility, as well as like the trustless security that we have, that that also protects our wealth. So it opens up a lot of options for us. Actually, I think I don't think I made any sense there.
Okay. I guess what your main point about optionality is something which I find is very crucial to the argument of why cryptocurrency solves a huge problem, right? Because if you think about it, right, optionality is something which is very relative depending on the person's wealth, correct? Like if you ask a person who is worth in the north of billions of dollars, what are his options to invest and store his wealth, right? It is completely different from a person who, let's say, stays in El Salvador. He's making barely maybe 500 US dollars a month, right, for him to survive, right? You ask him what is his options are to store his wealth. If you notice, right, before crypto was even regarded as an asset class, right, in order for a person to really store their wealth, they need to either store their money in very hard assets like gold is one of the oldest like store of values, and the other one is property, correct? So when you talk about options, right, it really is a question to a person currently today. If I have money, right, where do I want to put my money in the realm of investments that is given to me, so that I can make sure that the next generation after me, my sons, my daughters, even my grandchildren, right, they have a better start in life, right? That is the main question that people want to know, and that's why people are interested in cryptocurrency, because the main question you have to ask is that is the existing financial system, right, able to serve, right, the broad range of people, from the person now who barely has enough money, right, to the person who is as wealthy as Elon Musk? And the answer is yes, right, because it is very scalable. It solves the extreme ends. Okay, so for example, I give you an example. Today, let's say you earn, let's say put 50,000 US dollars a year. Let's say that is how much you earn every single year, and then you have a few options, right? Usually, you either decide to buy property, and then the problem when you decide to buy property is that you have made a decision, if it's a home, right, to actually root yourself in the country. Correct. Once you root yourself in the country, you have no choice but to basically stay there for 20 to 25 years, right? And then after 20, 25 years, you pay off the mortgage. Okay, how old will you be? You start work at 25. By the time you pay finish, you're around 50. Okay, so your entire future is literally in that country already. Correct. So while property, right, might have a very good history, historically, right, to store your money, the problem that it does not solve, right, is your mobility across the world. Because sometimes work does not mean sometimes work, right, opportunities, right, does not always correlate with your growing skill set, right? For example, today you might be very skilled at doing something that is in need in this particular country, but the world does change, right? The world does change. For example, if let's say you were to look at 2011, 2021, we didn't even have Binance or cryptocurrency exchanges back then. But what if your skill set over the last 10 years, right, you used to work in programming for, let's say, Facebook, then suddenly the requirements and the need and the demand for programming starts to shift towards cryptocurrency, but your opportunities are not in your home country because they decided to start a HQ somewhere else around the world, right? But because you have a house and a mortgage in your home country, what are you going to do? Are you going to sell the property, right? Are you going to uproot your entire life and go across the border just to find that opportunity? It's very difficult for a person to actually like uproot that because you have kids, you have all this like wealth tied in that nation country, right? And then you add in regulations, you add in cooling measures, you add in interest. But if I earn 50,000 and I decide that I want to keep my options open. I'm not sure whether I'm going to stay in this country. What I can store it inside Bitcoin, right? And then Bitcoin worth is in my thumb drive. I mean, optionality is something which is very important in the realm of financial planning and personal finance, because a lot of people, when they come to me, right, the biggest expense I've always noticed, right, is that they like to put a lot of money in their property, which is not wrong, but it also becomes a problem, right, when it starts to become an overcommitment. When you're pushing the cash flow every month from 20% is still okay, but when you're pushing it to like 40, 50, 60%, and in some cases, right, some people are spending like generations money, right? The parents, you put down a down payment for them, right? Then they're borrowing their money for their future, the next 35 years, right, loan, right? They are basically like putting in three generations of wealth in a single asset that roots them to a country. And the problem is they're not sure whether the country even has opportunity for them to grow their wealth.
Even when we talk about like buying like a cheaper place, like a cheaper property, some people are spending up to like 60, 70% of their income just to buy the place. I don't think it's worth it at all.
Actually, is it even doable if you think about 60 to 70%? What are you going to eat? You're living
Yeah,
your life on
exactly.
credit. And I guess the question is, if you're going to spend 60 to 70% of your income on the property, right? You obviously either need help, you need a side hustle, or you need to eventually get an income that reduces that 60 to 70% to about 20 to 30%, right?
Yeah, exactly.
Yeah, so when you do that, right, you're talking about income increase by at least double to triple your existing income. Then when you look at your particular area that you're in and that particular sector in that country, you have to ask the question now whether or not is that even feasible based on the median average in that sector, right? And if the answer is no, then most of the time what eventually happens is that people vote with their feet. They don't tend to stay in that country.
Yeah, there are better places to be, better jobs to have in other places, and
Yes,
I think that's why exactly why like you said, having that mobility a bit built into Bitcoin is exactly why we love it so much.
yes, precisely. And obviously, this is a use case which was not foresighted by Satoshi Nakamoto lah. That he definitely wouldn't have the foresight to know that COVID would have happened, right? And when COVID happened, eventually it started to change the rules of the game because people suddenly wake up one day, especially the white collar workers, they realize that they actually don't have to go to office to get shit done. Right, obviously, Satoshi wouldn't have been able to see this foresight. He didn't have the foresight to see such an event to happen and trigger and change the rules of employment, right? And I guess this is why, personally, I like crypto so much because the main thing that it does, apart from replacing the fiat standard, is that it really does have a lot of utilitarian optionality for people, right, who wants to be very mobile in the next decade, right, where I believe the employment, right, is going to be very extremely mobile, right? You can be earning US dollar wage and be living in a suburb somewhere around Asia or in even Eastern Europe. And I don't think that's it's going to be an issue, right? That is going to be a huge wave of change. In fact, for those of listeners who are listening, right, Ryan just mentioned to me before the podcast, right, that his particular job has exposed him, right, to jobs that are basically coming from abroad. Am I right?
Yeah, that's right. I work in a international company with many branches around the world. So what happened during COVID was that we decided to like pool all of our human resources. So basically, we restructured the whole international organization, and we are basically sharing work around the world right now. Like
Mm.
I'm working on like a few projects with the European offices. I'm also at the same time I'm also working on like some local projects. So yeah, and I've not been back to the office for more than like months worth of time for the last 2 years. So yeah, I would say like remote work is definitely the future. I don't I've done it. I don't think there's any reason why it can't it cannot work. And all that's left now for me is that needs to be solved is that I want to get paid on like more mobile basis, and like Bitcoin solves this. I can't be like working on like if like let's say the majority of work that I'm doing is um from Europe. It's not fair that I get paid in Malaysian ringgit. Correct. I'm doing the same work that as the Europeans over there, and I get paid like 5 times less. That
Yep.
doesn't really make sense. And I that's why I kind of like think like in the future, in the maybe not near future, but like in 10 years time, when Bitcoin's more like widely adopted, people might just get paid in Bitcoin, or like some native CBDC or something. But definitely getting paid in like cryptocurrency is on the table for these international organizations, not just my company that I'm currently working in, but also like other companies, because I believe this is something that has been happening throughout the last 2 years when COVID hit. Because when you think about it, like it just makes so much sense uh when the whole remote culture started coming in. Everyone's leaving working from home, so you kind of like need to cut costs on like your offices, your unneeded overhead, like your the damn printer that nobody uses. And eventually when and what employees want is like remote work, and always more salary higher salaries. And the way to do it is that I see is like you reduce all the overhead and you rechannel or you channel all that savings to these causes, like adding the IT infrastructure, or increasing certain people's salaries.
Yes, I think so. Um, and I guess that is not just in your particular sector. I can also share that in my sector, which I work in, right? The regulations did change over the past 2 years, where we are actually now able to do business and attract investors, right, abroad without actually physical meetings. And this is something which is very it's a huge turning point because last time before you're able to do a financial investment from abroad, right, there's a lot of KYC and AML that you need to do in person. And they have completely changed this model, right, where they actually allow cross-border investments without the person actually being in Singapore, right? And this is something which is completely unheard of, right, pre-COVID. But now because it is post-COVID, right, it does change the way that things are doing. And if I were to summarize it in one word, right, where the future is going to be, all right, the answer is mobility. All right. If you want to have the option, right, as what Ryan mentioned, the option to have the biggest mobility across the world, across borders, across jurisdictions, and go to where you are treated best, you need to have the option of having mobility around the next world, because it's no longer the case, right? Like it's like, for example, you think about it lah. Last time our parents, right, they're able to work in one company for 20, 25, 30 years and they don't have to move, right? But today, how often does a person, right, from a fresh grad today, right, work in a single company for like 20 years? It's actually very rare. Think about it, because they usually change every 5 to 10 years, right? Every 5 to 10 years they change because needs are changing, skill sets are moving, and opportunities are not necessarily always in the same country. They tend to go overseas. If they go very high up in the hierarchy, right, they tend to like mobilize themselves overseas, right? And basically this is where it ties down to the narrative where crypto is such an important invention, because it allows you to move your entire net worth along with it, right? Because in the old system, the legacy institutions, right, a lot of your wealth is actually tied towards legacy institutions ledger, right, where you have your property in that area, then there's restrictions for you to sell. Then there's a lot of like legal issues lah. It has a lot of legal issues for you to actually move your assets, especially hard assets like gold. You try to take 1 kilo of gold bar, try and cross it across try to get through the airport, right? You won't be able to do it. You won't be able to like take 1 kilogram of gold bar and cross the airport. In fact, even cash, you don't talk about gold bar. Even cash is the problem. Every time I go to JB, right? Every time there's a very huge sign out there basically telling me as a driver, if you have anything more than 10,000 ringgit, please declare. Right. So don't even talk about gold line and talk about just physical cash itself. I have to declare if I go to Malaysia, if I'm carrying more than 10,000 ringgit, I actually have to declare to them, right? So if you think about it, right, it really does limit a person, right, from sourcing from opportunities and go to the country where his skill set is most demanded and most suited to be remunerated the best. And that is a fact, right? So if you think about where the world is going post COVID, right, I highly believe there's going to be a huge migration, right, of talent around the world, because it is going to be pretty mobile. So for people who have been thinking about like going abroad, right, I honestly believe in the next 2 to 3 years, we're going to first start from the home, right? The companies are going to expand their ability to attract talent from people like like for your case, Ryan, right? People in Malaysia, people in Singapore, they're going to employ people abroad without having a HQ in the country, right? And the reason why they can do that is because now people can get paid in Bitcoin and in cryptocurrency, right? When we talk about crypto, it's not just about Bitcoin, Ethereum. There is also tokens which are backed by US dollar, USDT, USDC, right? To give some things in perspective, how much has changed. I entered into a lucky draw, I think last year, right? And basically, it was just a random Twitter giveaway, and then I earned money in Ethereum without any red tape. Last time, if you want to hold a lucky draw in US, the usually the legal, if you read the terms and conditions, is usually only open to US citizens, right? But now anyone can hold a giveaway on Twitter, right? And then say I'm going to give like 5 lucky winners, X amount of Ethereum, right? And then without any red tape, I can be like from freaking like some middle country out of nowhere, right? And he can wire that amount which is doesn't have any restriction straight into my private account with no issues and no red
Yeah,
tape.
as long as you have your address, your wallet address, it's doable anywhere, any wallet, anytime. Just
Yes.
you just need that line of code. Put that in, pop. You send that money across to wherever that is.
Yes, and I guess the main thing that it really does change is the legality and the red tape that is inside the existing legacy institutions lah. Because if let's say for example you want to open up a bank account in Singapore, let's say you're Malaysian, right? The amount of red tape you have to jump through just to create a bank account here. I mean, for obvious reasons, Singapore is very like they are very restrictive on AML and KYC lah. But it's really like a lot of this red tape right has gone to a point where it really does restrict a lot of people who are very genuinely, wanting to come into a country and create value, right? It really restricts the mobility and the efficiency of talent movement around the world, of course, I'm not talking about the black money and money laundering. That one we'll leave it to the the zealots to like complain, right? But eventually, I guess like what as I've mentioned, right, it really does solve the issue of fluidity of the money, right? We first saw this firsthand when PayPal actually allowed the payment system, right? Then PayPal actually allowed people to do business online. They can sell in US, then they can get the PayPal account. Then from PayPal, then we go to a bank account. But right now, if you remove PayPal, right, basically the transaction is from point A to point B. There's no middleman. Right, and then if I can send USDT right across to anywhere around the world for a cost on the Tron network for $1, and I don't have to go through like, why do I need to send the money to this institution? Why do I need to send the money? I need to declare this, I need to declare that, I need to show my IC, show my passport. All this, right, takes about 3 to 4, sometimes 5 working days. And even after you go through all that, right, you might not even be able to send the money because the financial institution will suddenly say, oh, no, you have risk that this is black money when it's not even black money. Right? So it really does change things very significantly. I don't know how the legacy like rules and regulations will govern this, but all I can say is that it is going that basically this particular system has grown big enough, right? I think right now it's more than $1 trillion, where it is enough to support an economy of skilled laborers going into the next 10 years. Because last time, right, if you were to rewind the clock in 2011, right, I think the Bitcoin market was not even $1 billion in market cap, but now it has grown to a point where it is big enough, right, to actually support several countries' GDP. And that amount of monetary value, right, is enough to create many jobs which are extremely mobile, and you can go anywhere around the world and root yourself. Right.
Mm-hmm.
So I think we like to talk more about this like fundamental stuff because I guess like all these like technicalities of crypto, right? A lot of people have already done it, but I guess we like to look at the foresight because I think that when you come from this like very fundamental basis, instead of very focused on the Bitcoin price or the Ethereum price, right? You coming from a perspective, right, that the investment opportunity, right, stems from a fact that mankind will just get better as this gets bigger, right? You don't need to be very precise about the valuation of the cryptocurrency, but you need to be very precise on what is going to happen 5 to 10 years from now, right? For example, if you look at companies like Amazon in 2011, right? Not many people could have seen that people will buy things online, right? If you spoke to those like aunties who used to go and shop in let's say the supermarket, right? They always say, no, supermarket is better, it's fresher. What's happening today? Everybody all buy from Lazada or Shopee, Redmart, right? Because they don't want to
Yeah.
go through they don't want to go through the wet market. Number one, they don't want to go through the carrying, driving, and basically you get to your doorstep, same price. Okay, the freshness maybe 5% differential, but it's just a better standard of living, and sometimes the prices are cheaper, right? So
Yeah,
you
it
save a
saves
lot of time.
time.
Yeah. So if you think about it, right, that's the problem that Amazon solved lah. And basically, what I noticed is that mankind we tend to go if the price is the same, but it removes the effort to basically like zero, right? And then the cost is like sometimes even cheaper. We will just pick the one which is easier. That has always been the case, right? So I believe that crypto is in that trajectory, right, where the uptick is going to be quite big 10 years from today. So I guess now we're going to go into the details, right? Because we've given you like the macro backdrop of why it's such a game changer, right? And let's talk about one of the biggest like topics which most people always come up to me, and I think they also come up to you, and that is what is the difference between Bitcoin and Ethereum? Because as okay, for those of you who do not know, between Ryan and me, right? Ryan is always the person who likes to invest in Ethereum. In fact, I think his allocation of Ethereum is higher than mine, right? For
Yeah.
as for me, my allocation has always been 60% Bitcoin, 30% Ethereum, 10% shitcoin. All right. So Ryan, why is it that you favor Ethereum over Bitcoin?
Bitcoin versus Ethereum. That's like kind of like the kicker question that I get a lot.
Zealots, zealots.
Yeah, and I just for context, my allocation is somewhat looking like 50% Ethereum, 40% Bitcoin, and 10% shitcoins. So as Aaron mentioned, I have way more, not way more, but just like 10% more Bitcoin, 10% more Ethereum than Bitcoin. And I do favor Ethereum over Bitcoin as a trade. Now, it may be a little bit contradictory when I say I love Bitcoin and the fundamentals of it, and but I hold more Ethereum. The reason behind this is because Ethereum is, if I look at it as a 5 year trade, Ethereum is no doubt a better trade than Bitcoin, but it does pose like a significantly higher risk than Bitcoin. So when we talk about like Bitcoin versus Ethereum, we talk about like blockchain and cryptocurrency. The main thing that we need to understand between all these different crypto projects, cryptocurrencies, is the functionality behind the cryptocurrency. What does Bitcoin solve? Like probably the last 30 minutes to 1 hour, we've been talking about what Bitcoin solves, what blockchain solves in general, and which is inclusive of like Bitcoin. And the Bitcoin, in my opinion, the the function of Bitcoin is solve this inflation, solve mobility. It serves as hard money, money that cannot be inflated, money that as the ultimate store of value. Whereas Ethereum, when we talk about Ethereum, it serves utility, I would say. Like when we talk about like things that or utility that's built on Ethereum, we've got DeFi, we've got NFTs, and recently we have like some of the DAOs and stuff like that, smart contracts and all that. So versus like it's a growing space, and it's kind of like the wild west now and on the Ethereum network. You can see like there's so much development around like all the DeFi, like DeFi coins, yield staking, stuff like that. And then you have like NFTs, OpenSea, everything is minted on Ethereum. Everyone is getting charged by Ethereum, getting hit hard by gas fees. And what else is on Ethereum, Aaron?
Basically, I think close to 80% of all the apps, right, which are on blockchain are on the Ethereum network, right?
Yeah,
So actually, yeah.
and I've just taken a look at like ARK Invest Big Idea 2022 market research report, and I think like they've compiled like you said, the app usage built on Ethereum or versus other proof of stake protocols like Solana and whatnot. I think there's a solid 70% of them built on Ethereum, and then there's like another I would say like 20% built on the side Ethereum layer 2 solutions like the Matic, Polygons and all that. So it's a total dominant they are in a total dominant position in this growing market now, and it's growing so fast. And that's why I think like in terms of like Bitcoin versus Ethereum, I would say Ethereum's like a more significant bet or like a more significant trade. But why do I say it's a trade, right? Versus Bitcoin. Bitcoin, I want to hold it forever. I don't want to ever sell it. But Ethereum, I will sell it some point down the road when I think the trade's like good enough. There's like enough profit. So yeah, that's kind of like my comparison, like my thoughts around Bitcoin versus Ethereum.
Yeah, I think what I like about Ryan, right, is that he's very clear that his position in Ethereum is a trade and not a holding of property, right? Because I think both of us come to the consensus, right, that Ethereum, the main reason why it's such a good trade is because it is the best risk-adjusted return asset in the crypto space. Because if you look at the dominance of the development of the network, of course you can argue that side chains like Solana, side chains like Avalanche, they have a lot of this they have a lot of this like positive growth that is more than Ethereum. But the fact of the matter is, if you were to look at every single huge project out there, every single one of them have a sidechain to ERC20, which is the Ethereum network. right?
Mm-hmm.
And if you think about it, Ethereum, the reason why that I would like to say that I think there's two main reasons. Number one, Ethereum is still proof of work. It's not proof of stake, right? It
Yeah.
is still a proof of work. It's still a proof of work consensus, which is shows that I think proof of work is what really does give the project a lot of value, lah. Number one, and number two, a lot of developers, right, they are building on ERC20 because a lot of these exchanges, right, before they can be listed on the exchange, a lot of them use ERC20 as a proxy, right, to be listed on the exchange. So they have interoperability lah, and interoperability basically means, like, for example, if you want to go from Ethereum, let's say you want to go to other networks like Avalanche, right? Sometimes you need to have a cross border chains lah. It's like, for example, you want to put your money from Singapore, let's say you want to transfer it to Hong Kong, right? You cannot do it. In order for you to do that, you need to go through a different type of network. But hey, it just works, right? And that is basically what Ethereum is, right? It serves as, let's say, the fast network of the cryptocurrency space, right? In order for you to get adoption, get into exchanges, right? Even if you are a standalone chain, right, which the exchange doesn't support, you won't be able to get listed, right? So I think that's one of the main reasons why Ethereum is such a good risk-adjusted return. But I think my consensus tie very closely with Ryan, and I see it as a trade and not a long-term play. So usually, when people ask me whether or not Ethereum or Bitcoin, I always ask them the main question now. What is the time horizon, number one? And number two, do you want to risk your money on the possibility, right, that Ethereum, right, gets replaced by a faster project? Because that is really the risk factor of Ethereum, right? Because every single person in the crypto space has already admitted, right, that Bitcoin will never die. Because I have never heard a single project that is out, right, where they label themselves Bitcoin killer. Never. And even if they try to label themselves, it's not going to happen now. If it
Oh
was
no
going to
no
happen, right?
no. There's one project. It's called Cardano.
Oh, Cardano. I mean, Cardano's they tend to label themselves a killer of everything, lah. So I mean, the zealots will
Everybody
come after
was.
me. The zealots will come after me. But I guess people who are into Cardano's try to read their white paper, and if you can explain it to me, then we would love to have you on the podcast. But so far I've not been able to hear from anyone apart from their ability to think that it's a trade, right? Even people who are supporting Cardano, I see their perspective more of a trade rather from a technical basis, lah. Whereas if you go to platforms like Bitcoin and Ethereum, right, you hear very well reasoned technical execution of the project that why it's going to be a dominant network, right? So
Yeah.
Cardano's, I will reserve my thoughts. The zealots will come after us. So I think there's enough people out there, talking about a project. But just for full disclosure, me and Ryan do not own Cardano at all, right? We don't. Um, so anyway, coming back to Bitcoin, right, versus the Ethereum argument, I've always felt that people who want to store their wealth and not give a damn about the next 10, 20, 30 years, right, Bitcoin is clearly the better project to hold because if you were to really go in depth and spend the time listening to what the Bitcoin consensus and the network is, you're going to realize that it is the hardest asset that has ever been introduced in mankind, lah, right? I think even digital gold is basically like under playing it. I see it more as digital property, right? Bitcoin is really like digital property, right? You're really just storing your money, and then it can go on for the next few generations, your grandchildren time, they still can take it, right? And basically, it's a black hole of financial wealth, right, that can no longer be stored in property, which is subject to regulation. As most Singaporeans should know, because our budget just released yesterday, it cannot be and versus gold, which has a history of being seized, and even bonds. For these like huge institutions who invested so much in bonds, I'm pretty sure that the bond portfolio side of things has been doing very badly in the last year because of the rise in interest rates. So when you really like sit down and look at it, right, I would say that Bitcoin is the pristine store of value. I mean, avoiding the fluctuations and volatility, because I will get into that later, right? Avoiding it, right? The monetary hub policy combined with the decentralized network allows it to be very immutable. Right. Versus Ethereum is more of like as Ryan like to say, like he likes to call Ethereum the app store of cryptocurrency, where you have a lot of
Yeah.
apps built on top of a blockchain. And if you think about that, right, then you have to ask yourself the question, right, in the world, right, of future of cryptocurrency and blockchain, right, how much is this app store worth? You have to ask yourself that valuation question now. And basically, it's an unlock of a human talent and human ingenuity, right, in the blockchain network. Of course, we have things like DeFi, things like NFTs, and things like DAOs, and a lot of them are actually built on the Ethereum network. You have things like Polygon, which is a layer two solution to address the very high gas fees on Ethereum, right? Then you also have NFTs like BAYC, right? We have a lot of these young entrants coming up and creating communities, creating development. And we also have artists who last time, right, they were not able to capitalize on their artistic talents, right, because they couldn't find a place to sell their art, and they need a place, right, where people are willing to pay them for their work. Right, if you think about NFTs, right, basically people who sell digital art, right, they finally have a platform, right, where they are able to monetize their artistic talent. But of course, not all NFTs are worth a dime, lah. I always feel like NFTs is basically just a root Goldberg machine of proof of stake system. Where you just mint. I mean, you think about it, it's really just a proof of stake system, right? You
Yeah.
buy, let's say, a BAYC, then the community, to reward your first mover advantage, they give you a lot of freebies, right? And then the next generation of people, they just have to buy in. So I don't know. It looks a little bit like a pyramid, lah, but I don't know what scheme is it called. Anyway, anyway, of course, there are things like DeFi, which is also built on the Ethereum blockchain, right? And I find that DeFi is something which is very close to what I work in, which is the financial sector. Because if you were to go back in history long enough, right, and you will realize in the 1930s, 1940s, right, or 1920s for that matter, there were many, many banks that was created in US, right, the financial banks, right, where they popped up in US and then they basically did their own ledger. And then in a way, it was a DeFi, but physical DeFi, right, where they create a bank, they issue their own banknotes. In fact, banknotes were not standardized in America. I think not. The standardization of American banknotes was something which is more of a modern history, because last time, right, there were many, many banknotes, right, depending on which bank you go to. Do you know that?
Oh, really?
Yeah. Do you know that last time, right, the American banking system, each bank had their own banknote?
Wow.
Yeah. It was not all $100 bills are George Washington last time. It is actually quite a recent invention, which is why when I take a look at the DeFi and you actually study history, right? I mean, that is basically what DeFi is. It is a bank, and every single one of them have their own dollar note.
But you know why you reminded me of like one of the reasons why I'm kind of very bullish on like Ethereum is also because of DeFi. Like the
Mm-hmm.
whole point about you brought up like DeFi, every different token is kind of like banks with different nodes. To me, I look at it like from a layman perspective. I look at it as a total solution for the traditional financial sector to plug and play onto blockchain. So
Yep.
that and the easiest way to do it is to adopt Ethereum, and that's why I'm so bullish on Ethereum. Like recently, I think freaking JP Morgan, they opened up like a metaverse store in Decentraland. Like the other day they were just like Jamie Dion, he was just talking about like Bitcoin
A
is
Ponzi
not a,
scheme.
yeah, it's a Ponzi scheme or something. And then now they open up like a digital store in the metaverse on Decentraland. By the way, Decentraland is also running on Ethereum. So yeah, it makes total sense to me. Like to me that Ethereum is the plug and play solution for the traditional financial sector to move their operations all onto blockchain.
Yeah, and if I would say that the best person who actually managed to explain Ethereum the best, right, and all these like projects is actually Michael Saylor. He basically just label them as securities, right? If you think about it, if you think about it, it's exactly like securities, right? Like you think about it, you have a managing team, right, managing the project, and basically all these like tokens or the monetary system, right? It's basically shares of the company, right? It's basically securities. Um, and that is why Michael Saylor don't invest inside DeFi, because or any of these like tokens, right? Because his question is, do I want more Apple, Facebook, and Amazon, or do I want more of this cryptocurrency? Right, that is always like go back, and I think it's very useful for people who want to dwell into all these tokens, right? You really need to come from a very fundamental perspective when you look at a project, right? You need to assess the management and hold them to the same standards as you were to analyzing a security like Tesla, right? Because these are metrics, right? Growth metrics, user metrics, wallet metrics, right? All these needs to be put in perspective for your options out there, not just in the crypto space lah. I guess that's something which is very very important that most people tend to neglect. Right, then of course, I think there's also a very upcoming trend of what you call a DAO. That is decentralized automated organizations, right, where people pool money into one particular project, right? And then they use the money and then they go and invest in other projects or businesses, things like that. Lah. So in a way, right, it's sort of like a mini country, right, where people allocate like $5,000 for a membership. Then you have 1,000 members, right? That's about $5 million. Then they take this $5 million and then they vote collectively, right, which project will get the money and then grow the wealth from there, right? So this is what you call a DAO lah. I won't go too much into this because I still think this is a very nascent platform. Personally, I have looked at the DAO, NFT and DeFi, and personally, I still think that the best quality bets are still in Bitcoin and Ethereum, the token itself. Because if you were to look in DeFi, NFT, and DAO, right, anybody who has made money in these projects are usually, right, number one, they started the project themselves. Number two, they got lucky, and number three, they think they are skillful, but actually they are lucky, right? So
Yeah.
I think that it is very that's why me and Ryan we tend to only put 10% of our crypto portfolio into shit coins, right? Because you have to understand that 99.8% of these projects will eventually fail, right? And then if you want to protect your wealth and have a very good upside, right, you need to put your money into projects, right, which is very likely to survive. Because if the project survive and this crypto space is going to 100x, right, the likelihood they will make money is pretty high, I would say. It's just that you need to lengthen your holding period, right? It's not a simple case like you make money very fast, right? Because most people they think about crypto, they want to make money yesterday, right? But it's not something which is done very fast. It takes time. If you were to talk to any person who has invested their money over a period of the last 10 years, most of them make their money over 3 to 5 years. It's not something which you buy today, then tomorrow you get rich, right? It does take time lah, because businesses, projects, even for cryptocurrency, it does take time for the infrastructure to come. It takes time for institutions to get on board and then invest their money inside. And that is the same for DeFi, NFTs, and DAOs, right? I put 10% of my net worth in these projects, right? Largely because I use it as a gambling pool, right? It might go up, it might not go up, but to me it doesn't matter because end of the day, it's money which I'm willing to lose, right? And if it doesn't play out, it's okay because I can depend on my Bitcoin Ethereum holding to cover the losses into the future,
Yep.
right? So I think that is what we want to talk about when it comes to all these shit coins because it's a very huge universe, right? And then we definitely have many content creators who cover them. But personally, from what I've seen, I've not really seen anybody who's able to like be a very clear leader in them lah. Usually the ones that win are usually the exchanges on all these projects like OpenSea, Binance, Coinbase. Usually the ones who make the money are the exchanges, not really the token the token holders. Usually they gonna market it, right, then they buy the peak, then after 70% crash, then they're left holding the bags. So I would just say when you get into this, just be very careful. All right. So I guess the next topic we really want to go on is addressing the FUD before we get into the Q&A, right? And that is basically, when you talk about like very fast growing investments, not even just talking about crypto, even like times 10 years ago about Amazon, 20 years ago Amazon, people are always worried about profitability. What if it crashes? Da, 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 da. So it's not uncommon. Fear, uncertainty, and doubt is something which even Tesla had. All these Tesla investors who bought shares in 2012, they went through a very huge FUD cycle for the last 10 years, and then right now they're the ones laughing their way to the bank, right? So let's talk about crypto because every single time, right, when someone comes up to me and talk about crypto, they always go through the same exact questions, right? Which honestly, if you look hard enough, it has already been addressed. It has been addressed already. So I guess we're going to touch about five FUDs, right, or fear, uncertainty, or doubt, right, in this particular podcast because I think these are the very common questions I get when people talk to me about crypto. All right, and the first FUD, maybe Ryan would like to take it, right, which is mining, right? Ryan, what do you think about the ESG mining implications when it comes to Bitcoin? Because I think one of the main questions people ask, oh, what if, let's say, the government shut down Bitcoin mining because of environmental ESG mining? They're very concerned about the carbon taxes.
Well, here's the thing, okay? If we are talking about like cryptocurrencies as the evolution of like traditional finance, the only apple to apple comparison that we can make is between the energy usage of traditional financial institutions versus cryptocurrency. Now, let me ask you one question. When we talk about like energy usage of like traditional financial institutions, what do we think about? Offices, overhead, and all that stuff, electricity that's being used by the offices all over the world. And then let's not forget about like gold mining. Okay, when you mine, you're literally poking a hole into the ground to extract and potentially polluting your groundwater resources and whatnot, and then you have to transport all that gold halfway across the globe with risk of like shipwreck, oil spill on the ocean. That's Don't tell me that's not pollution. Don't tell me that's not risk. And versus Bitcoin mining. Bitcoin mining is just you bring in your miner, you switch it on, you plug it onto the network, and it runs. It just sits there and run. Sure, it might generate heat, but look, like Norway is finding very useful applications for the heat. They are drying up their wood, the firewood or whatnot, with the heat that's generated as a byproduct of like the Bitcoin miner. And then electricity. A lot of them are going the ESG route by taking renewable sources. Again, like El Salvador's latest Bitcoin mining facility, it uses geothermal energy. Ever since there's this shift from like China and Kazakhstan into all the miners that has been are also green miners. They use wind energy, they use solar energy, and yeah, if you compare it like that, apples to apples, traditional versus the crypto mining, you tell me, you be the judge. You tell me if like which one is more eco-friendly, which one makes more sense.
I completely agree. If we go back to the fundamentals, right, of our first question, right, what crypto is, right, is that it is a decentralized ledger. And if you think about it, right, all these legacy financial institutions, which I can count, there are many hundreds of them around the world, right? You just replace them, right, with a computer that does ledger updates every 10 minutes, right? You don't have to be paying someone in a suit with a very multi-million dollar home, multi-million dollar car, multi-million dollar wardrobe, multi-million dollar house. You replace them with a ASIC miner that does the same job as them, right? In the middle of nowhere in Iceland at sub-zero temperatures, right? Updating the ledger every 10 minutes. I would argue that the ASIC miner consumes less carbon than what I have just described beforehand, right? So
Exactly.
people who are talking about like all these ESG claims, I can tell you, if you really go down to the numbers, right, and then think about how it can scale, right, the argument just doesn't make sense, lah. Because if you want to compare apple to apple, right, then you have to ask yourself the question: the alternative of the legacy institutions is to pay all this men in shiny expensive suits, right, versus ASIC miners which can operate at sub-zero temperatures anywhere around the world. That is the cheapest cost of green energy. And by the way, if you have actually understood and studied energy production, right, you realize that the cheapest form of energy is renewable energy. And for miners, right, they will go to anywhere on earth which is the cheapest and which is renewable, right, because they don't want to go to places which is expensive. So if you talk about cost efficiency, renewable energy and nuclear energy are the cheapest in the world to produce. And because they can go next to it and set up shop there, that is where they will go. Right, so that's basically it, lah. Right, so I think mining is a myth that has been largely debunked, lah. If you go deep enough, you realize that it's not really an issue. So the next thing, I guess, the fuck we're gonna talk about is hacks. Like people always ask me, Ryan, I'm very worried that Bitcoin is going to be hacked. What do you have to say about that?
I mean, hacks are just digital robberies. If you think about it, like if you have your money in the bank, it gets bombed. A team of like criminals come in and swoop up the money. That's kind of the same thing as like hacks. If you have your crypto on custodian wallets,
Mm-hmm.
and then if you put your crypto onto like a hard wallet, say like the Ledger Nano, all you have to do is just keep it safe at your home. And if it does, if your ledger does get like robbed in an unfortunate event, you still can recover your crypto with the 24 word phrase password. So
Mm-hmm.
it's like non-existent unless you have it in a custodian wallet. Then they get hacked. It's a complete total clusterfuck. But yeah,
Yeah, but I was also say that based on that example you give, legacy institutions are also not prone to hacking. Because in Singapore, as some of you Malaysians might know, and Singaporeans listening, you know that in the past month or so, we had a lot of this like very big hoo-ha of Singaporeans complaining that the bank that shall not be named has been a lot of phishing scams, that I think crossed in the billions of dollars in the last 5 years, right? So even legacy institutions are not, are not spared with the so-called hacks. Basically, it's just very lax security protocols. And if you are very worried about it, right, in terms of being hacked in your mining, right, then use a cold wallet, right? Because there are two levels of hacks which people are very worried. The first level is custody hacks, right, which is basically things like exchanges that can be de-risked through having a cold wallet. You can buy a Ledger Nano, buy a Nano Ledger X, or you can even use like Trezor or whatever cold wallet out there. It's all available. Or the other alternative is that you decide the other level of hack is that they're very worried that the main blockchain like Bitcoin itself gets hacked, right? And I think that is something which they are very, very worried about things like the 51% network dominant, which is actually, if you think about it, right, if you actually go very deep into the argument of people like worrying about things like, what's the computing thing they call? The epitome of computing that will hack the Bitcoin system. What's the other one? Quantum computing. They're very worried
oh
about
right,
quantum
right,
computing, right? They're very worried that quantum computing will come. I say, but then they fail to realize that every single system around the world, right, will be hacked if there's quantum computing out. You get what I mean? And
yeah,
on top of that, Bitcoin, if you actually understand the source code, even if there is quantum computing that's out, right, the source code actually does allow the security measures, the hash rate to go up to compensate for that. Because the hash rate in Bitcoin, I think it gets recalculated um
2 weeks,
uh every week or something like that. It gets
yeah.
recalculated and basically it just goes up every single time someone discovers a more efficient way of mining the Bitcoin. Right, and it has been going up since the creation of Bitcoin in 2011. So I don't think that is going to be an issue because I think when people talk about hacks, it's not just about custody. Also, very worried the source code gets hacked. And I would say that I don't think that is because the security is coded inside lah. There was a recent. I remember like watching a single. I remember watching one of the podcasts by Dave Lee, and then he mentioned that he was very worried that why is the incentive of security not inbuilt into the Bitcoin system. That's actually a misconception. It is actually inbuilt. It's called the hash rate update. Right, every single time someone finds a way to actually like mine Bitcoin and improve the security, right, the hash rate difficulty itself is the security system of Bitcoin. And at the same time, that is also the hash rate update, right, also allows, for example, if let's say all the ASIC systems were to go down, or there's a like global like touch wood World War III, right? All anybody need to do is just turn on a computer, okay, use a ledger that's been running, right, run the program, and then the ledger will continually update every 10 minutes. So in order for you to destroy the Bitcoin network, you need to shut off every single computer, shut down the entire internet for it to die. And if you tell me that is the solution, right, then I can say we're all screwed anyway. Because all of us, how many hours do you spend on your phone and your PC every day? Close to 16 hours, right? The first thing you touch when you wake up is not your partner, it's your phone. The last thing, okay lah, when you sleep, maybe the last thing you touch is your partner lah. I say, but the first thing most people touch is their phone now when they wake up, right? So, I don't think that is going to change in the next 20 to 30 years. I don't think that's going to change in the next 100 years. In fact, it's going to increase. So, hacks in terms of the base layer as well as the custody layer, I don't think that is a reasonable doubt, FUD lah, because if you really go deep enough, it has really been addressed. Okay, so the next part I want to talk about is money laundering because that's always a huge thing. Every single time I talk to any civil servant, they always tell me, Aaron, it's black money. So, Ryan, what do you have to
Jang,
say?
jang, jang. I mean, when we talk about like blockchain and the ledger and all, um, it's traceable 100% as long as you know the wallet address. So
Uh,
how is that even money laundering? I mean,
and
it's transparent.
yep,
Case closed.
yep. And in fact, if you had actually gone and take a look at the news, every single time that there is an exchange hack, right, the FBI always manages to get back the money.
Yeah, like the energy company in Texas, was it? They got hacked,
Yeah,
and then the money, the ransom was in Bitcoin.
yep.
So when you have the ransom in Bitcoin, you have the wallet address, and case closed. You just trace where the IP address of the wallet address is, and then you go swat the place.
Yep. And I really don't understand like why there's this FUD on like money laundering and black money, because like okay lah, let's put it clearly lah, there is no system in this world, right, which is free from this black money and money laundering thing lah. So long as there is a demand for black illicit activities, there will be black money or blood money on earth. That is just how we are. I don't think we're going to fix it. Every single time you kill a drug lord, another drug lord comes and then replaces him, right? Is unfortunately that is the way that the world works, right? And then I would say that blockchain or Bitcoin itself to be used as money laundering is one of the most stupid and ludicrous arguments out there, because if you think about the end game, right, and if you think about the developments that has occurred over the last 3 years, like every single time someone tries to hack a Bitcoin network and then get paid in Bitcoin, right, they only end up with a situation where they cannot liquidate their money. They can't liquidate it because there's no exchange, right? Because it is blacklisted. They know where the money go, right? They cannot actually like convert the money into fiat dollars, right? And then like the cash in. So they have learned over the years that it is just a terrible place for them to money launder lah. In fact, the best way to launder money, is cash. It's physical money, because the
Yeah.
the ones that have no history is physical money. Right? You take like this is why you see a lot of this, like if you watch a lot of these like Netflix shows, right? Every single one of them who want to launder money, what did they do? Set up a laundromat, set up cash. Usually the business is always cash. It's always cash based. They don't have nets. They don't have Amex. They don't have like credit card. They don't have any digital trail, because the moment you have a digital trail, right, they can track the dollar where it goes, the dollar flows where it goes, right? Whereas if you go physical cash, they do not know where the money. There's no trace lah. It's like, for example, I give you an example. Physical cash, right, is like the Nokia iteration in 2005, right? There's no GPS, there's no tracking system. It's basically just a phone, right? Whereas now, if you look at iPhone 12, iPhone 13, right, it has a GPS, it's an IMEI address. They can track where you are, correct? What drug lords what phones do they use to call each other? You think they use an iPhone? They don't freaking use an iPhone. They use all these like burn phones, right? There's like $3. After one phone call, they take and throw away. So like money and Bitcoin, right? If you talk about physical cash is those type of stuff, right, where they hold and then there's no history or where this money has been. Whereas you talk about Bitcoin, I can trace where that Bitcoin originated from, right, from 2011. There is a paper trail all the way from 2011, since the first creation of the ledger, right? So people who say money laundering, number one, I don't think they actually understand how the financial system works, and number two, they didn't go deep enough to address the issues, right? So the next part, an interesting one, is USDT, USDT lah. The main thing that people like to say is that this USDT props up the entire cryptocurrency space, because it is generated out of thin air. Then they use it to support the entire crypto network. What do you think about that?
I mean, USDT. Well, I'm not entirely well well educated on this part because I personally don't use USDT. I hold my crypto on I buy my crypto with the Malaysian ringgit. But if you ask me, like USDT, while yeah, sure, there has been like reports and investigations into the USDT with like generating USDT out of thin air. But now everyone's using USDC. Anyone who has been using DSDT has converted it out to USD and other tokens. So I don't see the problem with that at all.
And in fact, if you had actually taken the growth rates of USDC and other the tokens, which is backed by the US dollar, right, you realize that their growth rates is going to eclipse USDT very soon. I think this particular narrative, right, is something which is there is some fundamental merit to it. But I would like the counter argument I would like to give people, right, is that USDT has confirmed that so-called confirm that 60%, at least 60% of their reserves is actually one-to-one, right? Which honestly, if you were to compare it to the legacy institutions, it's really not bad already, because most legacy institutions, you'll be lucky if they actually like capitalize it at 10%, right? So like if
Wow.
you talk about difference in legacy system versus the USDT system, right, I would say that if people are going to throw that USDT is a Ponzi scheme and it's inflated out of thin air, you look at the legacy system, the fractionalized reserve system, you'll be lucky if they can return 10% or whatever they lend out.
Yeah, that's your cash, ladies and gentlemen.
Yeah, and that is basically the fiat system, fractionalized reserve banking system. And you tell me USDT at 60%, you tell me which system I prefer, I'll take the USDT any day, because at least 60% I know my money is there. right? The big risk, of course, is it's very tempting for them to create money or thin air, but I think that is only a concern, right? If you buy USDT, but if you buy things like USDC, and I think the regulatory bodies are going to come up with CBDCs, right? I don't think
Hmm.
that it will be an issue 5 years from now, right? It is a valid FUD concern, but I don't think it's as big to merit $1 trillion market cap wipeout as most people are very worried about, right? Because
Yeah.
there are already alternatives. Okay, okay, the next one I'll skip policy regulation because it's in a question. Okay, so the next question I would like to ask you, Ryan, before we go to a Q&A is, do you think that we are early in this adoption investment phase of crypto?
We are hella early. Well, yeah, sure. There's a lot of like mass adoption. You see celebrities or and politicians getting their salaries with from Bitcoin. You see like DeFi banks joining the Ethereum network and all that. But we are still relatively early. Um, and why do I say that? Is because when we take a look at the companies or the people that are joining the cryptocurrency, the blockchain space for work, you can see that the programmer base is steadily increasing. It's not to say steadily increasing, it's increasing so fast. It's like it's still very much in its early phase. There's still a lot of like weird stuff popping up like DeFi, NFTs, DAOs. There's a lot of like innovations going on, and it's proof to me that this is still very early, because when we have like proof of like innovation, things like crazy ideas popping up left and right, different protocols, different coins every day, um that's the sign of like it's still budding. It's still there's still a lot of different possible ways to implement the blockchain technology. And and what that means for like cryptocurrencies like Bitcoin, Ethereum, that means there's still a lot of room grow in price, not just adoption, not just your programmer base, but I think everyone only cares about the price, unfortunately. But yeah, there's still a lot of room to grow. ARK Invest, in their Big Ideas 2022 research report, they projected by 2030, Bitcoin's going to X30, and then Ethereum, I think, is going to X50, I think. Yeah, that's
Yep.
kind of like their projection. But
Mhm.
I think like to answer your question, are we early? Yeah, I think so. There's still a lot of room to grow. Keep your investing horizons long, and of course, like what we've discussed, like for the FUDs and all, there will be a lot of FUDs, because that is the nature of innovation. There will be a lot of people who's going to challenge things left and right, challenge whether if this is secure, this is what is this, what is that, how it's gonna work. But that's just innovation in general. You will face some resistance, but yeah.
I agree. Okay, talking about like innovation, right? I would say that there's two ways to address the question: are we early? The first question is to take a look at the macro picture, which what Ryan has shared with you guys. The second one I would like to always go back to is to look at the grassroots level. Grassroots meaning go back to the ground and ask people who are living their day-to-day life. How many of them are invested inside crypto, and if they are invested inside crypto, what is the percentage of their portfolio? So, for those of you who do not know, I went back to the grassroots sometime last week, 2 weeks ago, right? And then I basically just went around asking people, right? Around my age group, early 30s, mid 30s, some of them have kids, some of them have families already, right? What percentage of their portfolio is invested into crypto? Now, the most people that I'm talking to, right, generally they are quite average to middle class to above upper middle class people who are working in the civil service, a very, very broad range of topics. Some of them own businesses, right? I would say that I have not really spoken to a single person, right, who actually understands what crypto is. I think sometimes we take it for granted that we understand crypto and then we expect everybody to understand it. But the truth of the matter is, not many people I've spoken to, in fact, none of the people that I've spoken to actually understand what crypto is. You talking about Bitcoin, you talking about Ethereum, right? Sometimes I think we take it for granted that the particular Twitter feed, Instagram feed that we follow actually extrapolates to the wider population. And the fact of the matter is, the white population don't actually understand what Bitcoin and Ethereum is. Right, it takes a while for the education to come in play. It takes a while for people to understand what it is. And I would say that I look at the money that they invested. The most that I have spoken to was a person who had his about 5% of his net worth invested inside the crypto, and he sees it more of a hedge rather than a trade. All right. And if you ask me, is there an indication that we're early? I think the answer is yes. Because for one, right, institutions have not really come in and put their money in. They are developing the infrastructure. In fact, I just got two emails from two different exchanges based in Singapore, right? That right now, if I want to deposit my crypto inside the exchange, actually have to declare where the crypto comes from and that I have total control over the crypto. If not, they will not onboard me as a customer. And then if I want to transfer crypto out of the exchange into my cold wallet, I have to declare that the wallet is controlled by me. So technically speaking, that is a very huge sign, right? That the institutions, at least in Singapore, they're going to start to keep tabs on who owns what wallet, just to make sure that they understand that, what is the average wealth of the person. So that is coming in play. In Singapore, those of you who own wallets in exchanges, you should have received the email 2 to 3 weeks ago. I got the email from crypto.com. I got the email from Gemini, right? So they are really going to start to keep track on who owns which wallet in the cold wallet and the addresses, right? So if you ask me, is this an indication that we're early? I think the answer is yes. Because the biggest detriment, right, every single time I speak to a person about crypto, every single one of them tell me the same thing. Aaron, if I had bought crypto, I bought Bitcoin in 2016, I would be a multi-millionaire. I say today so expensive, 40,000. I say, yeah, too late already. I say, look, um, price is one thing, but sometimes I think as a person who value projects, right, you need to look at the market cap. And Bitcoin today is less than $1 trillion, right? If you put that in perspective, right, I always like to ask the question. That's one of the questions which one of the people have asked inside our Q&A, and that is basically, how do you value crypto? Well, to me, it's very simple, right? In fact, that's the first question. How do you calculate the real value of Bitcoin? I use the term, right? How do you compare it with basically the businesses out there, right? Today, Apple is worth about $2 to $3 trillion. What problem do they solve? They solve the problem of connectivity, right? They solve the problem of fixing communication. They have the phone, they have the Apple Store, they have the Apple Music. So all this is one little device on your hand, which you use 10 to 12 hours a day. Now, the question comes is, how do you value Bitcoin? Okay, so you go back to the question, what does Bitcoin solve? It solves real estate issues, it solves property issues, it solves decentralized issues. In terms of wealth, if you want to save your money, you don't trust the dollar system, you don't trust gold, you don't trust property, because it has been proven that it can be regulated, right? Then if it solves the store of value problem, right now Bitcoin is worth less than $1 trillion. Do you think that Bitcoin should be worth more than Apple? That's the question you have to answer. And you all should know my answer lah, because 60% of my crypto portfolio is in Bitcoin, right? So you ask me, are we early? I believe so, because based on my assumption, right, I use a very conservative assumption that Bitcoin is probably going to grow at an annual compounder rate of about 30 to 40% every single year. That is my estimation, which is quite in line with the ARK Invest price target lah. There's price targets ranging. If you understand the price targets of most people who have been following this space, right? Bitcoin, the average price target is about 4.6 million US by 2030.
Yep.
ARK Invest is more of the conservative ones. If you actually look at the projections done by some very well renowned people in this space, they actually estimate it's about 4.6, which is about 100x from today lah. It's not even 30. 30 is more on the conservative side, right? So and actually, if you were to take a look at the performance of Bitcoin versus the so-called high growth stocks, right, you realize that actually Bitcoin outperformed every single one of them in the last 4 months due to the bloodbath of the interest rate increasing, right? So yeah, with that, I think that concludes our first part of this session, which is to understand what is crypto. I highly suggest that those of you who want to know more about the fundamental basis of why crypto addresses a lot of issues, that you go and listen to our first podcast titled The Fiat Standard, because I think that will address a lot of issues. Then you can contrast this podcast with the first one, right? This is really the part two of actually like our first episode, lah, right? And then you'll be able to understand the picture more. And once you understand, then you'll probably start digging deeper into it. So let's move on to our Q&A, right? Which is, the first question I've already answered, and that's how to calculate the real value of Bitcoin. So Ryan, how do you actually calculate the real value of Bitcoin? Your perspective?
The short answer is I don't.
You don't.
I don't. But there are like valuation models out there, like the stock to flow, and there's like some other models like the Puel multiple. and other metrics that's derived from like the on-chain metrics. But I generally I started like when I started buying Bitcoin, I told myself I'm going to hold this for like the next 5 years, next 10 years. Sure, at first maybe I thought I would try to time the top and sell it, but eventually I gave up, because like understanding the fundamentals, it just helps me shift my perspective into the long term. So, but how if I were to like put a price tag on Bitcoin, uh, it would be somewhat in the range of like I would say times 10 in like 5 years. But I don't really try to say like how much is this worth and how much is Ethereum worth is going to be worth, because the only thing that really matters if like it is like the improvement of like the innovation platforms, improvement of like Bitcoin, and it's really hard to say to put like a price tag. Like Taproot, the Taproot update is like one of the most important updates in Bitcoin history. But did that really add so much to the Bitcoin value? The
Yep.
value propositions are a little bit different, but of course, but it's really hard to put a price tag on such things. So I would just like to say like focus on like the underlying platform, underlying technology, like the innovation rather than like the actual price of it. Because if in the end the end goal of like Bitcoin is mass adoption, like how we've addressed in the first podcast, using it as a gold replacement for a start, the next thing would be using it as the actual currency. Eventually that's the end goal that we reach. And when that happens, that's the real value of Bitcoin will be more than a trillion, 10 trillion, 100 trillion maybe, moonshot. But yeah, I just don't see Bitcoin as like a trade, so I don't tend to like put a price tag on Bitcoin. But if you still want to apply like discounted cash flow modeling and stuff like that, the stock to flow model would be a pretty good place to look for. Well, yeah, sure. All models like they do predict the future, and it is accurate until it's not. That's how all models are. But that you just have to be a little bit careful when you try to apply all these models onto your Bitcoin price projection.
Yep, I agree. And every time when we try to value an investment idea, it always goes back to the fundamental of the question, and that is what problem does it solve, right? Does this problem that is solved, does it fit a narrative where it is $1 trillion problem? Is it $100 trillion problem? Is it a $10 trillion problem? Right? Gold is worth 10 trillion, property, a bond market is worth 200 trillion, right? So you have to answer the question if this is a new asset class, because I think we've established that both of us believe that Bitcoin is going to be a new asset class, right? Then you have to answer the question: what is this asset class worth for the people in future, lah, right? Because it does have utility. So real value is hard to put a number down, but end of the day, the fact of the matter is it's not a very simple matter where it is just a utility, because there can be application that is built on top of the Bitcoin network, and we have seen the proof of work, the proof of concept, right, in places like El Salvador, where they adopted Bitcoin as a monetary legal tender, right? Then there's also other countries which has already adopted it as legal tender, and we are already seeing first world countries are accepting Bitcoin miners, and in fact, if you talk to institutions who invest money, right, they are putting money into cryptocurrency denominated firms that does mining, that does custody, so the infrastructure is coming lah. So you really have to just ask the question, what this entire particular sector, right, what is it worth? And personally, I've already given you my answer. I think it's going to grow 30 to 40%. It is going to be the fastest growing sector, I believe, even more so, right, than Tesla in the next 10 years, because
Yes.
I am actually seeing jobs that are being created, right, in this particular sector, and I don't see it stopping anytime soon. I really don't see it stopping. In fact, I believe, right, in the next 10 years, a lot of these legacy financial institutions, if they do not pivot, they are going to be in very deep trouble, because it is so disruptive to the way that they have been working in the last 100 years. Right. So the next question, I like this question a lot, because it's a question where it talks about the effect of war on crypto. The hypothetical scenario, this person actually asked like, what would a war, if let's say there's a war, right? How will it affect crypto? It's a very open-ended question, but I guess it comes back to like maybe to give some narrative. I can take this, right? Because historically, if you actually were to understand how World War I, World War II actually affects the asset moves around the world, right? Every single time after the war ends, right, the rules have changed. The rules generally change after every single war, and that is the money generally shifts to the winner side, right? So if you most people have the misconception that during World War I and World War II, the stock market will crash. But that's actually not true. If you were to actually really take a look at the war times, right, most of the time during a war, right, the stock price and the stock market actually jumps very significantly. There's a small little crash in the beginning of 3 to 4 months, but every single time when you actually drag the time frame out, right, the stock market always performs damn well because war, right, unfortunately, is a very stimulative effect on spending, right? Surprisingly, lah, people actually spend a lot of money during war to fund the war, right? Because you need things to be done, you need people to support the war. Then you also have a lot of lending, a lot of borrowing. They raise a lot of funds through war bonds, and that actually is very stimulative to the economy, but all for the wrong reasons, lah. So if you ask me the effect of war on crypto, I think we have actually seen examples of what mini examples of this happening in places like Canada, right? The truckers in Canada, and we have seen examples in places like Myanmar, right, where there is an uprising and there's a social distress, right, where people start to turn into crypto as solutions, where every single legacy financial institutions just refuse to do business with them. Right. The moment you turn off the tap of legacy financial institutions on uprising, people are just going to turn to alternative. And because crypto is so immutable, you cannot stop it, right? People are just going to go into that path, right? So if you ask me the effect of war of crypto, right, if anything, I believe that touch wood, if there is going to be a World War III, right, hopefully we don't get there. I just believe that crypto will be the dominant network for most people. And in fact, I believe it's going to increase the prices because the problem that most people have, right, trying to answer, right, is who is going to win and who will be the winner of the asset class after the war. And that is very dependent on rules and regulations that's going to change after a war.
Mm-hmm.
How about you,
It
Ryan?
would be somewhat like a hedge in that sense,
Yeah.
like a safe haven rather than because like in my opinion, a war is between countries. So if like let's say if it's like touch would say US versus China, where do you put your money? US dollar or China? How do you determine who's gonna win? With Bitcoin, I don't need to think about who's going to win. I just want Bitcoin, and whoever comes out on top, I'll convert that money into yuan or USD.
Or in fact, you don't even bother converting at all.
Yeah, exactly.
Yeah, right. Because for Singaporeans or Malaysians, Singaporeans, if you a little bit of back history, the moment the Japanese surrendered, right, the banana note eventually became worthless, and you could see a lot of these people sweeping up banana notes, which has been inflated to like God knows what. And then the dominant currency after the World War II and the Japanese surrendered was actually US dollar. Right, and in fact, if you actually go to war times, you realize that nobody actually placed any value in gold at all. In case you didn't know that, actually people place a lot of value into food staples, rice, food lah. Food. That's why you see a lot of these zealots who always think there's going to be a war. They have a lot of they have a lot of farms, they have a lot of seeds, because they seen like the past lah. If you actually read some of the historical book accounts, right, on like in Singapore, you can pick up the book World War. I think first war to from third war to first, written by Lee Kuan Yew, right? You realize that in his one of his beginnings, he actually recounted his experience in the war, and during the World War II, right, he actually was a trader of goods, as a young man, right? And he says that things like gold, things like copper had no value, and he basically held the money in food stockpiles, things like rice. Yeah, I say those retain their value better. So if you want an example of what war is like, right, you can read this type of books and then you can read personal accounts because that will not change. The aspect of commodities will not change. Commodities tend to be very valuable, right, when it is very scarce, right? And then usually things like store of value, like property, crypto, all this, right, it is only valuable during peacetime.
Mm.
Yeah, so that's something for you to keep in mind about lah. During peacetime, when there's no war, when productivity is something which is valued, then the price will go up. Right. So the third thing is, I guess it's a very common question is how do we start reading on crypto because there's many cryptocurrency, DeFi, NFT, etc. So for Ryan, where do you advise a person to start reading on cryptocurrency?
The ultimate book, the Bitcoin Standard, and the sequel, the Fiat Standard. those two books are probably the best place to start because when you want to learn about cryptocurrency, I tend to focus on the fundamentals. If you are looking for a more trading perspective, then I'm sorry because I can't help you with that. But if you're looking for a more like fundamental perspective, just to understand the underlying technology and what problem does it solve, then I would say the book, The Bitcoin Standard, by Saifuddin, is the best place to start because it touches on the problem, which is the fiat standard, and then it touches on the technology of blockchain. Why is it transparent? Why is it trustless? And then how the and it touches on the creation of Bitcoin and the problems that Bitcoin can solve within the traditional legacy financial system. And I also tend to look forward to like a lot of those prominent figures within the cryptocurrency space. Say like people like Michael Saylor, people like Block, people like Lynn Arden and Kathy Wood. Maybe here's like an extension question of that, Aaron. Who are these kind of like figures that you look for when you watch videos or like podcasts on Bitcoin?
Actually, in an extension to the books which you mentioned, which I love, by the way, definitely go and take a read at the Bitcoin standard as well as the fiat standard. And if you want a deeper dive, which is more local, you can listen to our first episode, which is the fiat standard. I think we covered quite well on the fiat standard in this podcast. The other thing I really look forward to is actually listening to the podcast by Saifuddin himself, who is the author of the Bitcoin standard. Actually, there is one podcast which I have been listening very frequently in the past 2 years since my understand trying to understand and wrap my head around this cryptocurrency space lah. Because he tends to bring a lot of very huge, very deep insight on particular topics on the fiat system versus the cryptocurrency standard, right? Like for example, he there was a few episodes which he touched on. There was one particular episode which I felt it was so interesting, right? Was the crypto what Bitcoin is to the Muslim banking community, right? Because for those of you who are not non-Muslims, right, you realize that the Muslim banking system and the existing legacy banking system are two completely different systems that have two completely different ways of doing things. And I think he addressed it quite well, in my opinion, because he got on one of the person who was inside the Muslim financial system, right? And then he managed to explain it quite well. And then another one, he also invited a person who was inside the farming in US and how the fiat standard actually like changed the way that farming is done in America. Right, so anything from Saifuddin I love because he's very in depth in the way that he explains. He's very astute, so his books are great. I also do like to listen to Lynn Alden because she is very macro, very sound, and very grounded in her analysis. And actually, if you have been following her for a long time, you start to realize that actually her calls are actually pretty on point.
Mm-hmm.
She called in 2021 before the rise in oil price that she actually expected oil price to increase. So she increased her allocation towards Shell, ExxonMobil, and all these companies, and it has done very well for her. So I would say that she's very grounded, she's very analytical, and she's very deep, which is what I like and I look for in a person. Kathy Wood, I'm very selective of what she actually publishes because sometimes I don't actually agree with what she says lah. Kathy Wood, I'm a little bit like 50-50. Not everything she says I will listen because I'm very selective over parts which I think that her insight is valuable, and certain parts I don't really agree. Like there was a moment in time where she invested inside China, and personally, I'm not a person who would like to invest in that country because of a lot of red tape and issues. So I tend to disregard that portion of her analysis lah. I like to look more inside America stock market because you know experience. I already been burned a few times inside China, so I avoid that market completely, right? And that has been the right move for me lah as of late. So these are some of the people that I like to listen to. Of course, I always go back to grassroots. Sometimes it's good that I have people who are inside NFT, DeFi, people like doing all this like VV collectibles. I like to follow these people because these are what you call grassroots level of analysis, right? You look at what is happening on the ground, then from there is a very huge signal whether or not there's going to be adoption, right?
Mm-hmm.
So that's one of the ways that I like to do it. But these are just some of the general places to start. You just need to understand that, um, all it you need to take at least about 6 months, I think, for you to be able to understand what cryptocurrency really is. Then once you get it right, it's actually not that tough, I would say, because you learn a lot as you go, right? Okay, so the next one is Went Back to the Moon. By one of our friends from Ring It to Dollar Podcast, I think us. So Ryan, when are we going back to the moon?
Yeah, when the rocket's ready, lah, buddy.
I don't know how to answer that question. If I know, I don't have to work already. Um, yeah, I mean, look, as a volatile asset, sometimes we go down, sometimes we go up, sometimes we go sideways. That's pretty much every single YouTuber's line now. They tell you about trades, right? But I would say that nobody can tell you when it's going to moon, right? End of the day, you really have to go back to your homework, which is the funda analysis on whether or not you think that this sector will grow. If the answer is yes, then sometimes the best thing to do is just to stay invested and not to like trade. Because more often than not, and to be honest, I've not really met a single person who trade who make a lot of money. Most of the time, the people who make a lot of money, right, and proclaim they do it via trading, usually the results are not sustainable because beyond a certain point, right, you have issues getting into positions, right?
Yeah.
So that's something which I will not go into.
Just dollar cost average, auto for the long term.
Yeah, it's really like that boring lah. Making money is very boring lah, guys. This is not something which like we tell you to like leverage, etc. Like,
Oh, buy
look, make
now, buy now. No, no, no. It's not like that.
yeah, it's like honestly, if you understand how investing works, right, it's actually a very boring like thing lah. Making money is in the waiting lah. When you sit your ass and do nothing, that's when you make money. You don't really make money trading lah. A lot of these people will tell you that they make money trading. Actually, that's bullshit lah. Because if you actually really look at their so-called trades, right, then most of them got wealthy buying Bitcoin in 2015.
Yeah, exactly.
Yeah, they didn't
Exactly.
really
Even
trade
like
their way up lah.
the so-called YouTubers that trade shitcoins, they are all hodlers from like the last cycle.
Yeah lah, they all like hodl like from 2015. Then they pretend like they're very good at calling all these like trades. Which honestly, if you've been following them, all of them lost money lah. All of them got liquidated and lost money lah. So my suggestion to you is don't go and bother with all this like margin trading, because eventually you will get burned lah. So don't our suggestion is don't get to it. Understand the fundamentals, right, and then just stretch your time horizon by 5 to 10 years, and you should do fine, right? Yeah. So the next question is DBS move into crypto nitty gritty details no one knows compared to Binance other brokers. I guess the main question he's trying to ask is, DBS recently announced in Singapore is basically the Maybank of Singapore, that they are going to move inside crypto and going to go create an exchange for retail investors. And then I guess his question is, do you think that legacy institutions will open up to retail for crypto?
I think it will be something on most legacy institutions' long-term plan, but it will have to come after like mass adoption. It will take some time. Don't think it's gonna happen within 5 years even.
Yeah, I think it's going to take a while before, um, in Singapore, our CPF board accept Bitcoin as payment for a down payment lah. I think it's gonna take a while lah. It's not gonna be overnight lah, because end of the day, they still have to determine whether this is a property or asset or security class. They actually haven't defined what it is yet. So the definition is gonna come, right? It's gonna take a while. But I actually am quite optimistic that by end of this year, they are going to define what crypto is. And that is going to have implications to the allocation of assets lah, right? Personally, I think it's just a question of when, because DBS has already opened up their trading desk to the so-called um, accredited investors lah. So it's just a question of when they're going to open up to. And as a Singaporean, I'll be very happy if they open up, because it means I can travel the world without caring about the custody risk of cold wallet lah. End of the day, people always say they like cold wallet, but it's usually only effective when there's wars lah. If during peacetime, most of the time, right, it's better to just like outsource that holding to a bank. Just don't get involved in the loans and shit lah, right? So the next question is, I think it's a very good question. Is there any point to diversify away from Bitcoin and Ethereum, or will that be a case of diversification? That's a good question.
I would say it depends on capital allocation and the kind of like and what you're diversifying away from Bitcoin and Ethereum. So if like the thing that you are diversifying towards say is like shitcoins, then I would say keep the capital allocation low 5 to 10%, maybe like even like less than 5% if you're not comfortable. Because like say Solana, right? I've devoted like 5% of my capital to Solana and went to shit. And I it didn't really hurt me because it was like 5% only. And it's something that, you know, Bitcoin and Ethereum, my holdings can make within a day's worth of like like maybe say like 5% increase. It will cover like the 5% allocation in Solana, the losses that I made. But if like you're talking about like other assets like stocks, say Tesla, or you know, the big tech, Apple, Facebook and all that, then it really depends on the growth potential. I tend to view Bitcoin and Tesla as like similar in terms of like growth in the price. So Tesla, and that's kind of like why I have almost equal parts of like stocks, but growth stocks versus cryptocurrency. I have like a 50-50 portfolio. I'm thinking about like increasing cryptocurrency to 60-40, to 60% of my capital allocation. But that's kind of like how I would take it. Like, just you have to compare like the growth potential, if that makes sense.
Um, I think what Ryan has mentioned is very important in terms of capital allocation, because end of the day, right, when you decide to put money inside, things like so-called diversification, right, you really have to ask the question: is it really diversifying, or is it really a moonshot? That's a real question you have to ask, because diversification basically means, right, there is a very fundamental grounded basis for you to allocate capital into this idea. Like, right, for example, like Ryan says he allocated inside Solana, right? Usually, my understanding from Ryan when he decided to do that is that it's basically a hedge against Ethereum, right? For example, if Ethereum, the adoption in Solana exceeds Ethereum, then his Solana position will cover Ethereum. And that is a very strategic allocation. It's not speculative, right? Whereas for my case, I will invest in things like Dogecoin, or invest in things like Shiba Inu, but I see it as a moonshot. So I am fully prepared now for it to go to zero, right? So I don't really see it as diversification. I see it more of a moonshot and gambling. So I'm very, very clear on my positions that it can go to shit. Even my positions in things like Sandbox, in position in things like Decentraland, right? I am very aware that it can drop by 90%. And the thing I have to ask myself, right, is that if it does drop by 90%, will I be okay with it? If the answer is yes, then I will instigate the position into it. There is some level of fundamental trading that goes into it, but I see it as a very long-term play. And I'm okay because it's only 10%. So I think this question also goes out to these people who actually invested in companies like Palantir, right? Because I think the last time we talked about it was like $25. Now it's like $10 to $11, so it's dropped by 50 to 60%. The main reason why I'm not affected so much by Palantir drop, right, is because this goes to the next question. The next question a lot of people ask is, what percentage of my portfolio is in crypto? Okay, what do you call it? To be very transparent, right? It's close to 90% of my wealth is in crypto. I only hold about 20 to 30% of allocation into equity. Now, a lot of you are very sharp eye, very fast to calculate. That means it's 120%, correct? So why is it 120%? Very simple. Because last year, towards the end of the year, I recapitalized my finances and actually took a loan to buy more crypto. And basically, some people, they borrow money to buy houses, right? Correct. I borrowed money to buy Bitcoin, and then I paid over a period of time and a loan. So some of you have mortgages that you use to buy property. I have a mortgage to buy Bitcoin. Basically, that's how I structure my portfolio, which is why I can say that I'm about 90% crypto, 30% into equity. So coming back to my Palantir position, right? 33% of my equity is inside. 33% is inside. What you call it? Is inside the Palantir. But if you actually look at the net wealth effect, right, the drop, I'm only suffering a 2 to 3% overall net worth decrease, right? So when you actually like put that in perspective, right, that is why I'm not fretting, because from the get-go, I have always been a little bit on the side of valuations when it comes to high growth securities, because number one, I'm fundamentally a value investor, all right, and it took me a while to become a growth investor, but I also understand that growth investing takes at least 5 to 10 years to actually come to fruition, right? So that is why the so-called diversification doesn't really affect me, because I size my position very carefully. So you go back to your question about Bitcoin, Ethereum, does it make sense to like diversify away, right? I say it depends on your particular depends on your particular goals. If you want something which has the very has a probability of like 100, 200, 300x, right? But then you're very worried about going to FOMO, right? Then my suggestion is just take money that you think you can afford to lose, put it in a small allocation, and then if it moves, you're happy, but be fully prepared that it goes to zero. So that I will not say is diversification. Diversification only happens, right, when you don't know what you're doing and you buy everything, right? Like you have
Yeah.
like 100%, then you buy, I put 1% everything. That's called diversification. But if you are very strategic and very grounded in making decisions, right, where you are very clear that it has a purpose in your portfolio, then I do not think it's diversification. It's also a hedge against your emotion, just in case this particular meme stock or this particular meme token goes up by 100x, then you miss the boat, right? So in a way, it's basically to fuel your own emotions. I think that's also very important when you keep in mind about capitalization. So as Ryan has mentioned, his percentage of portfolio is about 60-40, right? 50-50 lah. 50% growth, 50% inside crypto. For full decoration, mine is 90% in crypto, 30% in equity, and I'm very very comfortable with holding it, even though there has been quite a bit of a drawdown lah. But technically I'm still up and green because I bought it very early, so I'm okay. The next question is, how do you calculate your crypto gains tax from trading or DeFi farming for Malaysians and Singaporeans? Ryan, do you think you can answer that?
Not with confidence because in Malaysia we don't have a clear guideline. There has been a lot of touting that there will be taxes imposed on capital gains for cryptocurrency, but so far, according to the budget for 2022, there has been nothing on cryptocurrencies. So I will just take that as like a vague no
Mm-hmm.
taxation. But it's probably something that will change in the future, knowing our government. That's all from me.
Okay, personally, I cannot answer this question because there's a element of professional like due diligence that I cannot answer lah. Because this is a really an accounting question, right? So my suggestion is that if you tend to have like taxation questions, my suggestion is always to ask to a proper tax consultant because they will be the best people to answer these type of questions lah. But if you want a general like answer from me is that from what I understand, right, in Singapore, crypto gains tax are not taxed in Singapore because these are usually regarded as capital gains tax, and in Singapore there is no capital gains tax. The one which I'm not very sure is the DeFi farming because I think, as I've mentioned earlier, right, they have yet to actually categorize what cryptocurrency is. They need to actually categorize what it is before they can actually like label down the taxation. So you ask anybody to calculate tax, I don't think anybody in the world can answer that yet because they need to first come up with the number one, they need to label what type of asset class it is. Then once they can label it, then they come up with a tax structure for it. Right. So
Mm.
I don't think anyone can answer this yet. Yeah, I think US they have some guidelines lah, but specifically for Malaysians and Singaporeans, if you want a very in-depth answer, my suggestion is just speak to a tax consultant. Yeah, because I think both of us we cannot give answers. Because usually when you ask this type of question, like you don't ask a legal question. Ask your If you have a legal question, you don't ask your parents what to do, right? You ask a lawyer.
Yeah,
Right.
exactly. And then for
Yeah.
tax, I'm as clueless as you in terms of like the tax. I don't even know how to pay, like claim some of my tax relief sometimes.
Yeah, I mean I have a working knowledge of it lah because I do it, but I think this one usually it's best that you ask a professional because in case they give you wrong information, right, at least you got some legal legal recourse lah. All right, so yeah, so that's clear. So I guess the next question is if crypto is really the future, right, how will the volatility hold up against fiat stability? I guess to paraphrase the question is, if crypto is really the future, is volatility going to be still an issue compared to fiat?
You want to take this, Aaron?
Wow, how to answer this? Okay, if you were to go back in history and look at the 1929 crash of the fiat system, the biggest crash, 95% crash of the Dow Jones Industrial Index in 1929, right? The Great Depression, right? The large reason why the crash occurred is because they were still on the gold standard lah, so de facto gold standard, and people were over leveraged, overextended, and when the time came to pay their loans, right, they realized that people had no money to pay, and every single one of them was basically just drawing on overextended credit, right? And a lot of people seem to take for granted that the so-called fiat standard, right, being so stable, is the effect of good monetary policy, which is not really true, because if you were to actually study like bubbles and crashes, right, a lot of these bubbles and crashes occur, right, when it goes back to the hard-based monetary policy of the fundamental economic rules lah. And in this case, Bitcoin, the hard cap of 21 million, right? The volatility is part of the system. It is, because if it is very similar to what happened in 1929. It's very similar to what happened before Nixon took the Americans off the gold exchange, where if you want to take a loan from a bank, right, you need to put up collateral, right? You actually do need to put up collateral if you want to borrow money from a bank before the gold standard. Then after they remove the gold standard, what happened? Now you can take money, don't even you just they introduce the credit card. Now you can take money, you don't even have to pledge collateral, right? They have unsecured credit facilities which you can put up, right? And in fact, now you can even borrow money to buy a home for your future income, and they just need like 1 or 2 years, maybe only 1 year of your income statement to determine what type of loan quantum you can borrow. Last time you want to take a loan, you have to refinance your home and then you take a mortgage. And a lot of this growth, right, is very dependent on the base layer of the financial system lah. So if you tell me why is it volatile, it's volatile because that's by nature the design. I think a lot of people, they seem to I think they take it for granted that the so-called stable monetary policy is in fact due to the reason every single time there's a market crash, they print their way up to make sure that it goes back up, right? And that has been happening since um, if the first major occurrence happened in 2008 after the housing bubble crash, then the second time happened in COVID, right? So that's why we're facing like record inflation right now. And I don't think that's going to stop. So if you ask me volatility, fiat system is not volatile lah. You just pay in inflation lah, right? It's just a hidden tax that you pay in inflation. And how many of you your wanton mee price went up? My one, and I live in a suburban neighborhood. My wanton mee went up from like $4 to $6. That's a 50% increase in price.
I mean, just take a walk along your supermarket. Everything has raised in price. It's insane.
Yeah, so like I mean the fiat stability is not really stable. It crashes up. It just doesn't go down, you know. So um Bitcoin is volatile as a function of design, because hard monetary policy, right, usually it is very volatile because it always goes back to the ground basis. Do you have my Bitcoin? If you buy a Bitcoin, you store in an exchange. If I go and withdraw money, do you have all the Bitcoin which I purchased? If the answer is no, then basically, it's going to be volatile lah, because there's going to be a restructuring of wealth, right? Yeah. So how about you, Ryan?
Well, I think as mass adoption comes, technicalities on like volatility will be ironed out. I mean, even like those large legacy institutions and the nations, not all are comfortable with having a like a very volatile monetary system. So as like the mass adoption comes, I think volatility will be reduced in some ways. So it is something that's like a work in progress, kind of like your Apple stock. People take its stability for granted as well. But 20 years ago, it was going up and down like Tesla today. So yeah, as it ages, it's going to be much more stable.
That's a very good point you mentioned, actually. In terms of like ownership, the more people owe, then the less the velocity, right? Then every single time you move, then it's going to be stable. Yeah, I agree with that. I agree with that completely, actually. If you talk about Amazon, it also went up and down like 10-20%. Tesla also goes up and down. Palantir also goes up and down, and that is basically the cost that you have to pay for a very high growth asset class lah. Unfortunately, it can go up 30%, it can drop down 30%. That's just the nature. But so long as the adoption is on an uptrend, fundamentals are okay, then it's all right. Right. So the last question, I guess, is why is the government racing to have their own CBDC tokens?
Again, Aaron, do you want to take this?
Okay, macroeconomics. All right. Okay, this one you had to get into a little bit about the politics and the minds of the politicians and the global macro scale. Put it this way, the American government, all right, the fact of the matter is they are not comfortable giving away the power of creating US dollar out of thin air to an entity that is based in, the like a country which they have no jurisdiction to, right? Because when you talk about things like USDT, USDC, there exists a situation where it is very tempting, for the organization, even if they were to say it's back one to one, right, where they can inflate and do a fractionalized reserve financial system in that particular token. All right, so that's number one. And number two, a CBDC token, right, basically ensures that that the government who released this token, they keep the power with them and they are able to trace the tokens lah. Because if you actually like understand the fiat standard, you're going to realize that even the central bank, the central bank for the world, right, they actually gives loans to these third world nations to give them loans. It is actually denominated. The IMF is all denominated under the jurisdiction of the American financial system. So you ask me why do they want to have their own CBDC? Very simple lah, political control and power, what, right? End of the day, that's the real answer lah. That's also the reason why China has outlawed the use of physical yuan. They want digital yuan because they can track, right? You look at America, they are also on their way to like digitization. You look at Singapore itself, we're also on our way to digitization. Do you know that a lot of our financial products can no longer be paid in cash? We have already
Damn.
outlawed that. We have already outlawed that for the last 10 years ago, right? When I joined the industry, you can pay in cash. No amount, there's no limit now. Today, the cash limit is, I think, $100 only. If you want to pay
Wow.
anything more than $100, they only accept digital payments. They only accept digital via digital payments. They don't accept cash. So it's basically tracking lah. They just want to make sure that they can track, who owns what, and just be very clear that they only have they are the only entity who has the ability to control the amount of money in the system, because that has been the way lah. There's only one ledger in the American system, and that is the Federal Reserve, right? And they also
Mm.
control the IMF. So if you ask me, that's why they are racing to so-called have their own CBDC lah, because they want control. If you ask me, does that implicate Bitcoin? Actually, to be honest, I don't think it does really at all. If they really do like regulate this, right, then it's only positive for the crypto space, because they would have accepted the fact that the blockchain technology is here to stay, because they are also embracing it, and it really does not have any material impact on Bitcoin, because Bitcoin is not really a currency. As I've mentioned, my thesis is that it's digital property. It's not really a currency. I believe that we will still use the US dollar, right?
Yeah.
But in terms of property wise, right, it's going to take away a lot of the overinflated values on physical property. Where people own six houses and they only stay in one, right? It's going to take a lot of value away from the overpriced bonds, which is right now negative yielding, 7.5% inflation, 2% bond yield. You're getting negative yields, right? So I don't believe that it's going to affect Bitcoin that much in the long run. Yeah. What about you, Ryan? Why do you think the governments are so insistent about wanting to have their own CBDC?
It's somewhat well, my views on this are like there's more good versus bad. But as you said, it kind of ties back to your point about control, political control, control of the total money supply of like the dollar or whatnot. It's way easier to change a program to say my hard cap on the US CBDC is say like X trillion tokens. I when like say the market drops, I can just change the perimeter to like say from like 10 trillion, I just add another zero behind. I got like 100 more tokens in the system. 100,000 more tokens in the system. So that's kind of like my idea from like a IT perspective, because it's much easier to program money supply. Does that make sense?
Yes.
And then, but also, like in terms of like transparency, again, if it's blockchain, then it's traceable. So you can see like where money is going, where it's coming from. And yeah, again, it's all about control in my opinion. And it's just innovation in general, because right now, money, it's not really traceable. You can like money launder and all that. And yeah, and there's like a lesser degree of control with the traditional fiat currencies versus CBDC. So it's a pretty obvious step for the nations to progress into CBDC in the future. Because again, like the future's all in digital wallets. So we're gonna pay stuff from our phone. We're gonna like scan QR codes and all that. And CBDC seems like the easiest way to implement that, in my opinion. So it kind of like just connects everything. It makes total sense for them to have like improvement into from fiat to CBD.
Yeah, and in fact, if people in the world actually adopt CBDC, I believe that it's going to increase the stronghold of their and the resilience of the currency. To be honest,
Yeah.
yeah, it's actually
Because
going to
like
increase that.
you can't say like you take some fiat, you destroy it or whatnot, because it's all on the blockchain already, and
Yeah, in
you
fact,
can't print fake money.
yeah,
So it's much more better on on control, security and whatnot, because it's just blockchain.
yeah, and you can't even have the so-called super dollar printing, because once you remove that, once you remove physical cash, right, and you depend on blockchain and it's decentralized and no one can hack it, right, then you realize that the security of the dollar, from fake dollars are completely diminishes, right? No longer have, you no longer have to worry about frauding due to like fake money and stuff like that, lah. So I guess that's something which is actually very positive for the money system itself, right? So at the same time, it also really debunks a lot of the issues about the USDT concerns, right? The
Yeah.
Tron concerns, all this.
When the CBDC comes out, all the USDT, USDC will be rendered quite useless.
Yeah, unless you decide to like go, I guess like CBDC will have they'll be able to control the onboard and offboard systems lah, right? So yeah, we'll see how it goes. I think end of the day, people will vote with their private wallet, right? If let's say there's too much control and they're not careful, then people will just create their own alternative lah. Because that's how we are. If it's too controlled and then we cannot do onboard offboard, then the good news about blockchain is that it allows people to vote with their wallets and money. If they don't like it, you can always vote with your money, which is what has been happening, I think, over the past few years lah. As we go back to the crux, that mobility is going to increase, and any technology that serves to reduce mobility is going to be very heavily punished for the next decade. The any solution going forward needs to increase mobility of talent, mobility of wealth, and while improving security as well. If you don't allow that to happen, right, then I think the value proposition of the institution is in trouble.
Definitely.
Yeah. So that was our last question. So I guess it's time for us to close this. I think it's the longest podcast we've had, more than 2 hours. Yeah. But I hope that we covered a lot, because I think this was one thing which we wanted to do, but we wanted to have some backdrop first. So for Ryan, do you have any like things you want to say before we close off?
As like a recap, I think the most as a recap, I think the phrase that we used the most in this podcast was probably mass adoption or adoption in general. So like tying back to the first question from the Q&A, how do you calculate the value of Bitcoin or any other cryptocurrencies in general? I would say just go look for this law called the Metcalfe's law. It talks about like network effects. So when you have like a network effect where you are gathering users, in cryptocurrencies case, it's gathering wallet addresses. So if there's more wallet addresses being created every day, there's proof of adoption. When you see like institutions jumping into the space, that's also proof of adoption. And as long as you see that, that's fundamentally the case for me, at least, to invest in in the cryptocurrency, Bitcoin, Ethereum, whatever. So yeah, mass adoption.
Yep. So, well, for me, many people always come up to me and ask like, how do I get into crypto, etc. I say, well, look, guys, there's many, things and many content creators out there who shares amazing content, right? Ours notwithstanding, you can just easily search up in Google and just search on it. We have really touched a lot of topics, and we hope we answer a lot of questions for you guys out there who are just beginning to start in crypto, or if you're a little bit deep, you're just trying to get your head around the file. We hope we have addressed that. And of course, we enjoy answering some of the Q&A which you guys have, because I think some of the questions are pretty good. We enjoy them. So definitely, we might do a part 2 depending on how well received this podcast is for crypto, and see some of the questions we can answer. But I think that's it for us, from us today, from Ryan and me. We both definitely enjoyed talking about crypto, and we hope that you enjoyed listening to it as well. So definitely tune in to our next podcast. You can follow us on our Instagram handle. For Ryan is Books and Stongs on his Instagram. For me is Aaron Goes Global, and of course we are both available on Spotify and Apple podcast as well as a Google podcast, and then we'll definitely see you in the next podcast.